Okay, today we're going to do sums on cash budget. We'll do the sum on the LTC brothers. They want you to prepare a cash budget and they've given you details from January to June 2018. They've not mentioned for how many months, just said that prepare a cash budget. So we'll prepare it for all the months, that is from Jan to June. So if you see here, from Jan to June for 6 months, we will prepare a cash budget. The cash budget is divided into two parts, that is cash receipts, which we also call it as part A, and cash payments, which is part B. So let's go to the solution. First, the estimated sales from Jan to June is given, where it is 1,50,000 from Jan to March and 2 lakh from April to June. We are not interested in how the sales was. We are interested in how much was cash sales, credit sales, and how the credit sales were collected. So this information we will use it in the working notes. Then the sales for the month of November and December also will be used in working notes. The third point, the sales are 30% in cash and 70% on credit. So first we will record the cash sales, which will come under the receipts, because when you sell goods, you receive money. So cash sales, into bracket you mention 30% of sales, because 30% of the total sales are cash sales. So January to March, the sales, the given here the figures, it is 1,50,000 from January to March and 2 lakh from April to June. So of 1,50,000, you need to find 30%, which comes to 45,000. So January, February, March, same sales. So it will be 30% will be 45,000. April, May, June, the sales are 2 lakh. 30% of 2 lakh is 60,000. Now the remaining are the credit sales. So how is it collected is given in the next point. If you see here, they have said 40% will be collected after 1 month and 60% after 2 months of the sale. So we will prepare a working note on collection for debtors. In working note, we always take all the months from November, if the data is given from November to June. So here we'll write first credit sales. As we all know, cash sales was 30%, so 70% will be the credit sales. So 70% of sales we have to take here. For November and December, the sales amount given was 1,20,000. 70% of 1,20,000 is 84,000, and for December also 84,000. From Jan to March, you know the sales was 1,50,000. 70% of 1,50,000 is 1,05,000. So from Jan to March, April to June, the sales was 2 lakh. 70% of 2 lakh is 1,40,000. So this is how the credit sales values is what we have got. Now what we'll do is we'll see how the collection is done. So collection, they have said 40% in the first month after sales and 60% in the second month after sales. So 40% in the first month, in the sense whatever I'm selling in November, the first month after November sales is December. So 40% I'll receive in December and 60% I'll receive in Jan. So first month, second month after sale. So of 84,000, 40% is 33,600, which I'll receive in December, and 60% is 50,400, which I'll receive in Jan. So it is like this. So November 40% in December and 60% in Jan. Similar way, now December's I will take in Jan 40% and Feb 60%. Similar way of Jan, we will take 40%. We will take 40% in Feb and 60% in March. So this is how it will actually go. So let's record it now accordingly. Okay, so 84,000, 40% is again 33,600, which will go in Jan, and 60% is 50,400, which will go to Feb. Now January 1,05,000, so we have to take 40% of that in Feb, which is 42,000, and 60% of that in March, which is 63,000. Similar way, February 1,05,000, 42,000 in March, and 63,000 in April. That is 40% and 60%. March 1,05,000, 40%, which is 42,000 in April, and 60%, which is 63,000 in May. Then April 1,40,000, 40% of 1,40,000 is 56,000, and 60% is 84,000. May, we will take 40% in June, and remaining 60% will go to July. We are not preparing cash budget for July, so we will not take it ahead till July. We'll only total from Jan to June. So total collections from Jan to June, we need to add it. We are just adding the collections, remember, not the credit sales. So only these two, 40 and 60, how we are going to receive is what we have to add. So once you have added it, we will take the same in the cash budget as collection from debtors. Okay, here you can write collection from debtors. And how did you get this? It's from the working note 1. So this is how it actually works. Okay, let's go to the next point. We finished the collection thing. Other anticipated receipts are rupees 70,000 from the sale of machine in April. So we are going to receive sale of machine. In the month of April, we are going to receive 70,000. And rupees 3,000 interest on securities in the month is securities received in June. So in June, we are going to receive 3,000. And this 3,000 is against interest on securities. So these were the other receipts other than sales. Let's see the next point. The estimated purchases for material is rupees 60,000 per month from Jan to March and 80,000 from April to June. So this is the amount of purchases, but when have we paid, we have to see. So we are interested in the payment. Let's see the next point. The payment of purchases are made made a month after the purchase. The purchase for the month of December is 60,000. So whatever we have purchased in December, we will pay in Jan. Whatever we have purchased in Jan, we'll pay in Feb in March. So 1 month we have to delay in payment. That is, we are taking 1 month time. So you write payment of purchase into bracket 1 month lag, because we're taking 1 month time to pay it. So December purchases, as it was told here, is 60,000. So that we will pay in Jan. So December purchase in Jan. Jan, how much is the purchases? Just see the above point. 60,000 per month from Jan to March. So Jan 60 will be paid in Feb. Feb 60 will be paid in March. And March 60 will be paid in April. Now we'll see what is there from April to June. So they have said and rupees 80,000 per month from April to June. So 80,000 of April will be paid in May, 1 month later, and 80,000 of May will be paid in June. 80,000 of June will be paid in July, but we are not preparing it for July, so we will not take it here. Miscellaneous expenses are expected to be rupees 3,000 per month. So that is also a payment because it's an expense. So miscellaneous expense every month 3,000 you take it. There is no time lag in payment. They have not mentioned anything. So when we incur at the same time we are going to pay it. So we are done with this point. Whatever I'm done, I'm highlighting it with red. Next, wages payment are expected to be 25,000 per month and manufacturing expenses are to be paid 32,000 per month. So we have to take 25,000 per month for wages and 32,000 per month for manufacturing expenses. So here wages and manufacturing expenses also we need to record. There is no time lag, so when they are incurred on the same time they are paid. So finish with the expenses of wages and manufacturing expenses. Next, general administrative expenses are expected to be 15,000 per month. So we'll record here admin expenses 15,000, sorry, 15,000 per month. Finish with the admin expenses as well. Next, dividend payment of rupees 30,000 and tax payment of rupees 35,000 are scheduled in June 2018. So in June we have to pay dividend 30,000 and tax 35,000. So June month 30,000 for dividend and 35,000 for tax. So we'll write it here, dividend payment and tax payment. So this is what we have paid in the month of June. A machine worth rupees 80,000 is planned to be purchased on cash in March 2018. So we have to purchase a machine in the month of March. So here you write purchase of machine 80,000 in March. The cash balance on 1st Jan is 28,000. So this is the opening balance and the minimum cash balance required is 30,000. So what we will do is first we will find the total of receipts, which we call it as total of A, and the total of payments, which is total of B. Once we get the receipts and payment total, we can minus it and find the surplus or deficit. So we'll add all the receipts for all the months. Similar way, we'll add all the payments. So these are the receipts and payments. Now we can write surplus or deficit, which is nothing but the receipts A minus the payments B. So we'll find the surplus or deficit equal to receipts minus payments So for all the months, we will do receipt minus payment. We'll get the surplus or deficit. We'll add opening balance to this, which they have told for January is 28,000. When you add opening balance, you will get the closing balance. So 28,000 is the opening balance minus the deficit of 6,000. Your closing balance will be 22,000. This closing balance of 22,000 will become opening balance for February. So we'll add it because there is surplus. It will get added. This 24,400 will become opening balance for March. So 24,400. Now March, the deficit is too high, so it will eat up all the opening balance and it will show a negative balance, which we have to take it as it is. So it is minus 40,600. So in the month of April, from 1 lakh surplus, the closing balance is negative, so that is minus. So we get 59,400. 59,400 will become the opening balance of May. And 83,400 will become the opening balance for June. So what we are doing is if there is deficit, we are minusing it from opening balance. If there is surplus, we are adding it to opening balance to get the closing balance. Now the twist in the problem is they have told that the minimum balance required should be 30,000. So this amount 30,000. But if we look at the problem, we don't have 30,000 in most of the cases. Now you can do this by borrowing and getting it, but in the problem nowhere they've mentioned to borrow. So we are not going to borrow. What we will do is we will just show the surplus or deficit as compared to the closing balance. So here I will write less minimum balance required. So you required 30,000 rupees as minimum balance, but we don't have it. So I'm just showing how much we're falling short. Okay, so here I will write again surplus or deficit compared to minimum balance. So as compared to minimum balance, what is my surplus or deficit? So whatever closing balance you have got, from that you minus the, so see here 22,000 was the balance, but I wanted 30,000, so 8,000 I'm falling short. So I have to just show this so that whenever the company wants to borrow, it can borrow this 8,000 rupees. Okay. So similar way, I have 24,400, but I wanted 30. So from 24,400 minus 30, 5,600 is still required. Next, I had already a deficit of 4,600 and I need 30,000 for my minimum balance. So total deficit is 70,600 that I need to borrow. Okay, then in this month I need not borrow. The balance is 59,400. I already have more than 30,000. So here I can invest if I want. So in the last 3 months, usually you're not going to borrow because you have surplus and you're having money more than the minimum balance. But the first 3 months there was deficit. So if you're going to borrow in the first 3 months, you can borrow this much amount. So this is how you have to give suggestions. If they don't ask for borrowing and all, you just need to show the amount. So whatever is the minimum balance, my closing balance was 22, but I need 30. So 22 minus 30, 8,000 is what is still falling short. Same way, 24 minus 30, 5,600. And here 4,600 was the loss, minus 30, you'll get 7,600 as total borrowing that you need to make. Okay, so this was a problem on LTC Brothers, and I hope it was clear and understandable. Let's go to the next sum. Mr. Surya. Okay, Mr. Surya has recently set up a restaurant and is facing liquidity problem. He is seeking your help to prepare a cash budget for the next quarter from Jan to March. The following information is provided. So he wants to prepare a cash budget from Jan to March. So we'll prepare it for Mr. Surya. So that's for the next quarter, that is from Jan to March. So prepare a 3-month cash budget. So first we always write cash receipt. Keep the particulars column a little bigger because we need to write the details of how we have received cash and how we have paid. The next should be cash payments, which we also call it as B. So let's now solve the problem of Mr. Surya's liquidity problem. Sales are expected to be rupees 50,000 in Jan, 55 in Feb and 60 in March. All sales will be in cash. So all the sales are cash sales means we have to take sales as it is, as the figures are given for each of the month of Jan, Feb and March. So let's take 50, 55 and 60. So here cash sales, all the sales are on cash. So 100% of sales are on cash. So for Jan, Feb and March, let's look at the figures once again. We're doing this point. For Jan it is 50, for Feb 55 and for March 60. So 50,000, 55,000 and 60,000. This is how the first adjustment is done. His estimated purchases are rupees 20,000 in Jan, 22 in Feb, 25 in March. Payment of purchases will be made after a lag of 1 month. Outstanding on account of purchase in December is 22,000. So we are going to pay purchases after 1 month. So we are going to delay it by 1 month. You write payment of purchases (1 month delay). So 1 month. So whatever you purchased in December, 22,000, we will be paying in Jan. What you purchased in Jan, 20,000, will pay it in Feb. And what you purchased in Feb, 22,000, will pay it in March. And 25,000 of March will go to April, but we are not preparing the budget for April, so we will not bother to take it here. The rent per month is rupees 5,000 and his personal withdrawal per month is 5,000. So we have to take these two things in the payment, rent and personal withdrawal. Both are 5,000 each. So we have payments of personal withdrawal and rent done. Next, salaries and other expenditure payable in cash are 15, 18 and 20,000 in the months of Jan, Feb and March. So we need to pay salaries and other expenses. Write it here, salaries and other expenses. So how much it is, and it is paid in cash, 15, 18 and 20. So they have not mentioned any time lag. That means we are going to pay it in the same month. Okay, the last point, he plans to buy furniture worth rupees 25,000 in February by paying cash. So he is planning to buy furniture in February. So purchase of furniture. And for this, he is going to pay cash for the month of Feb, and that is 25,000. So only in the month of Feb, you take 25,000 as purchases. Next, the cash balance at present is rupees 5,000. This becomes the opening balance of cash. His target cash balance is 8,000. Determine the surplus or deficit of cash in relation to target cash balance. So let's see. Here we will first find the total of A, which is nothing but the same amount, 50, 55 and 60, because only one thing is there. So there are no other receipts. We just have a single receipt. So then we write the total of B, which is payments. Okay, so it will be all these values. We add it up. So we get the total of B, which is payments. Now we'll find the surplus or deficit, which is A minus B. So we need to minus 50,000 receipt minus 47,000 payment. Same way for Feb 55,000 receipt minus 73,000 payment. We have a deficit for Feb. And for March 60,000 receipt minus 52,000 payment. We have a surplus for March. After getting it, we do add opening balance. And given in the problem, the opening balance was 5,000. If I add it, I get the closing balance. So 5 plus 3, 8,000. 8,000 becomes the opening balance for next month. Minus 18 plus 8,000 minus 10,000 becomes the opening balance. That's a negative opening balance for March. Minus 10,000 plus 8,000 minus 2,000 is the balance for March. Okay. Now they have told that the target cash balance should be 8,000. So we need to see what is happening. Determine the surplus or deficit of cash in relation to the target cash balance. So like we did in the previous sum, we will write here less minimum balance required or target cash balance. You can write they required 8,000 as target. Now we have to see what is the surplus or deficit in relation to the target. So surplus or deficit compared to target. So how to do it? We need to less from 8,000 minus 8,000. We met the target. There is no surplus or deficit. Minus 10,000 minus 8,000 minus 18,000 is the deficit. We're going to minus, remember, from closing balance, we're doing less minimum balance. Minus 2,000 minus 8,000 is what we wanted, right? So less there. So minus 10,000 is the. So here we are 18,000 away from the target and here we are 10,000 away. See here, first we should get this 10 plus we should keep 8,000 additional as minimum balance or target balance. So that's why it is like it is minus 18 and minus 10. I hope the problem was clear. So these were the two sums on cash budget that we have done today.